Hey guys, and welcome back to my channel. In this week's video, I'm going to do something a little bit different. I'm going to talk about a specific client example of mine of how we're able to nab an incredible deal on real estate in Vancouver just based on today's market. So we're going to start off talking about that, and then I'm going to touch on furthering what we talked about in previous videos surrounding some of the changes happening with development around the city. Real quick before we get started, if this is your first time to the channel, my name is Hassan. I'm a real estate agent in the Vancouver area, and I make educational real estate content to help you on your real estate journey. I also make content designed to help you make your move in and around Vancouver. So if that sounds interesting to you and you wanted to chat with me one-on-one, you can book me for a free call in the Calendly link below. But regardless, if you like this real estate content, we shoot every week. Subscribe to this channel so you don't miss a future video. So a few weeks ago, I did a video saying that we were entering lowball season, lowball offer season. So I did a video talking about how to write a lower offer, how to get it accepted, and little tips and tricks on how you can actually move forward writing a lower offer and not offending the seller, but getting a great deal on real estate. Twice in the last 3 weeks now, I've been able to help clients do just that. I'm going to talk about one specific example. Now, I will link to that video because it's a good precursor to what we're going to talk about now. But one of the things I mentioned in that video is that sometimes when you are submitting a lower offer on a property, you're not necessarily doing it. Of course, you want to win the property, but you're not necessarily doing it to win the property at that time. I call this an expression of interest. Sometimes you'll write an offer, it may get rejected. It may be too early for the seller to even look at accepting a price at that level. But as time goes on and as motivations change on both sides, on a buyer side, on a seller side, sometimes deals come together later on. If the buyer hasn't found a new property, the seller's now motivated. They go back to the people that have written offers generally, and they check and see. The other agent will check and see to see whether the buyer has bought anything. So we submitted an offer over a month ago. It was a lower offer for sure, but we did it strategically. It got rejected. Didn't get countered, but periodically I kept in touch with this agent. And long story short, the seller motivation increased over the last month. They circled back to us. They said, would you be willing to write an offer again? We were able to write an offer, not at all, like barely higher than our original offer, got accepted right away, no back and forth. And it's to the point now where the price that we secured that property for, even the bank thinks it's too low of a price for the property. And I'm going to explain what I mean. So we get the accepted offer, and part of the process, if you're new to the buying process, once you get that accepted offer, assuming you have a financing condition in there, the bank will often want to send out an appraiser to determine the value of the property. So what the bank does is for example, they'll say, we'll loan you 80% of the value of the property, but we're not going to take your word for it that the value is what you've chosen to offer and what you have an agreement at. We're going to come in ourselves and we're going to take a look. We'll determine the value of the property, and based on that, that will determine how much we will loan you. So we have an accepted offer on this property. I can't share too many details because as of today, it's not purchased. But as you view this video, actually, it'll probably be sold at that point, but I can't really share specific prices and addresses. But so the bank comes in, they do their appraisal. And the thing to know about the bank appraisal is there is no incentive, literally no incentive for them to appraise it higher than your actual purchase price. Because of what I just talked about, how it determines how much money they're willing to loan on the property. And the more money they're willing to loan, the more risks they're actually taking on. So if the buyer is not asking for any more money, 9 times out of 10, even more than 9 times out of 10, that appraisal is going to come in at the purchase price. Sometimes it comes in lower. So in scenarios where we're at today, where people have bought pre-sales 2 or 3 years ago in hot markets, and now they're going for financing today where prices have dropped, there are definitely instances where this appraisal from the lender is coming in much lower. And that's a horrible situation, because what happens in that situation is the buyer needs to make up the difference in appraisal to the actual purchase price. So again, for the purposes of this video, it usually always comes in at the purchase price or sometimes lower. Bank comes in on our property and they determine it's worth $25,000 more than my buyer is going to pay for it. To give you an idea, what that actually equates to, it's almost 4% of the purchase price. So they're basically valuing it 4% higher than what we've contracted on paper to buy it at. And assuming 20% down on the property, it's unrealized gains, so on paper or whatnot, of almost 20%, 19-20%, assuming putting 20% down, and that's before my client has actually even committed to the property, paid any sort of deposit. So in that same video that I'm talking about lower offers, I talked about how if you feel the market is going to continue to go in a downward trend, you have to, when you're writing a lower offer, you have to basically be saying that you're paying a future price for that property. So in our situation, yes, the market could go down further. My client has instantaneous built-in equity of this $25,000, and that could offset any sort of downcrease in the market moving forward. And this is not a one-off example. I'm finding opportunities like this in multiple areas across the market. Now, this specific property, there were a lot of things that I was able to determine prior to us writing and really pushing forward on this property. I knew that, we were able to determine what this client bought it for at pre-sale. And in fact, my client purchasing it now, the original buyer is not making any money on it, probably losing a little bit of money as well. I was able to look and see and figure out who their lender was on this property. So what is happening with a lot of pre-sales right now is they may have gotten pre-approved at pre-sale time at, say, 2.5%, 3% for their mortgage. But now today they're having to take out a mortgage at 6%, 6.5%. And so, having to complete so they don't lose their deposit, but now their mortgage payments have gone up significantly. Many times these are vacant properties because they don't have tenants in them yet. They're just trying to sell them. In this case, I was able to dig up who the actual lender was. It wasn't a TD, it wasn't an RBC. I knew it was alternative lending. And when I say alternative, they are not offering the lower rates that the big banks are. So I know they're paying a higher rate. I'm able to see the listing is about to expire. A lot of signs pointing in the direction that this seller's motivation will have increased. So hence we, kept that communication going, and our original offer, which again, it was an expression of interest, it ended up working out for us in the end. So there are opportunities to be had out there where, again, you're paying a price today that's protecting you for future, any sort of decreases in the future. I personally feel, based on my business, I work with a lot of people from YouTube, reach out to me, plus other social media networks, my circle. I've had more consultations from sellers, buyers, in the last few weeks than I've probably had in the last couple months. Like, it's getting very busy from a planning perspective, doing a lot more buyer tours right now. Yes, at the time of offering, a lot of buyers are choosing to step back a little bit, and they're saying, okay, well, let's just wait a little bit. Let's just try and time it a bit better. But they're putting all their ducks in a row, doing all their homework, viewing properties. I always tell people that when you're trying to time an official bottom, you never know what it is until you're looking backwards at it. Even for realtors like myself who are in it every day, I'm studying the market on a daily basis. It's always in hindsight where I'm like, wow, that was a busy week. Like, things really shifted last week. And at that point, it's too late. We're entering into that seller's market. So when I talk about seller's markets as well, like for myself, I personally purchased my first property almost 20 years ago. I've purchased multiple properties since. And the one thing that, I wish I did more frequently is I wish that I purchased in balanced markets or buyer's markets. We don't get too many here, but balanced or buyers. I've made 90% of my purchases in a seller's market, which human nature, it pushes people to want to buy property in seller's nature or seller's markets. I'm no different. Human nature, it's just the way it is. Realtors are no different. We get excited as well when other people are excited. But looking back, I wish I made more strategic purchases, because outside of renovating a property, it's one of the best ways to ensure you get capital appreciation a little bit quicker on your real estate. So I want to switch gears now. That was the client example. I want to talk a little bit about some of the development changes. Last week I did a video talking about how the BC provincial government is mandating the type of development that's going to happen surrounding transit, minimum of 20 stories, depending on how close you are to transit. The biggest question that a lot of people had, well, a couple things, parking. How is parking going to be treated? The Vancouver City Council actually just came out, and basically what they said is all along the Broadway plan, so this is going to run along the Broadway subway project, all along the Broadway plan now they're removing the parking requirement, as well as in the west end of downtown Vancouver. So when I say removing parking requirement, they're basically going to put it in the developer's hands to say how much parking do you want to offer. And parking is a very significant cost to the developer. So, in essence, this is a way for Ken Sim and City Council to basically try and encourage more development applications to happen along the Broadway corridor. I don't believe that they're seeing the type of demand, I can say with certainty, of development proposals from the Broadway plan. I think they were expecting an influx of developers coming in to build. In fact, in many areas along the Broadway plan, they came out with a rule saying per block, we're only going to accept 2 development applications for certain types of buildings, if those are high rises or low rises, whatever it might be. So they wanted to put a cap on the demand because they were concerned, but I don't think they're seeing the level of demand in these developments. So they're trying to make it easier, but they're also sending a message that, look, we're going to create these communities around transit, and we're going to basically take that parking requirement away from the developers, put it in their hands. Now, as someone who works in the west end of downtown Vancouver, that place is a disaster for parking as it is. Of course, some developments in downtown Vancouver, the developer's not going to choose to not have any parking. It's not going to work for everyone, depending on the type of product it is. A lot of those towers, of course, are luxury products. So, but I do think for the Broadway plan specifically, which it was enacted over a year ago now, I do think that they're really trying to motivate people to move forward on projects here. The BC policy now with the 20 stories minimum near SkyTrain, sounds like that's going to supersede any sort of view cones that the city of Vancouver has set up. View cones, I believe I mentioned in a previous video, where there are protected views throughout the city which affect building heights. So that's going to be out the window now. So kind of all of these moving pieces, but that's how parking is going to be treated. I know a lot of you are not going to be happy to hear that. Some of you will for sure. But again, it's probably the most amount of feedback questions I got was surrounding parking. The other is with all of the changes in terms of allowing multi-units on single-family sites, how are these sites going to be able to manage and handle the types of services that are a requirement for added population on the sites, right? So you have a single-family home, maybe you have 2 or 3 groups living there. You have the main house, you have the secondary suite, and then you have the laneway. If you're allowed, say, 6 or 8 units, depending on where that's located, how are the sewage services going to operate properly? A lot of the municipalities are pushing back, saying we're just not set up for it, and there's going to be upgrades that need to happen. You can bet that those upgrades, the charges for them, are going to be passed down to the developer in some sort of way. And so ultimately, a couple things are going to happen. They're not going to get the buy-in, the adoption that they believe in these multiplex scenarios. And when they do, the developer cost is still going to be significantly high, and that's ultimately going to get passed down to the consumer. So it's going to be interesting to see how all of these things play out. I mentioned in the last video, a lot of it is going to come down to the BC provincial government's policy manual, where they're going to outline all the legislation surrounding this. Again, we'll have this by the end of the year, so that's something I'm really looking forward to. It's going to allow us to basically plan out how these things are going to look, but also where the best opportunities are going to be for investment, specifically in these multiplex type properties, where exactly the best opportunities will be in 2024. So there you have it, guys. I hope you enjoyed this week's video and you learned something. If you did, hit the like button, because what that does, it takes the video, it sends it out to more people so they can also learn from it. And if you like this weekly real estate content, subscribe to this channel so you don't miss next week's video. And lastly, again, if you're in the Vancouver area or you're in the Fraser Valley, you want to talk with me one-on-one about your real estate situation, I'd love to chat with you. You can book me in the Calendly link below, or you can just send me a text, give me a call, shoot me an email, whatever's easiest for you. Would love to talk to you one-on-one. But outside of that, thank you so much for watching and have a wonderful day.